Hello and welcome to class. Welcome back to class. Uh, we are going to continue with our 3 days free online forex trading seminar on behalf of ROS-RENA Forex Training Institute. I welcome you back to class. Before we continue, let me just briefly inform you that since the program was initially scheduled for 3 days, but because of the technical challenges we had on the first day, we've decided to make it to add additional 2 days. However, the additional 2 days is going to be for mentoring. So please prepare yourself, and the mentoring is going to be on live trading. It's even good for us that we are going to start on Monday. That is Monday and Tuesday for mentoring, which is going to be on live trading. So please get yourself ready. Get 2,000 naira ready, which you will use to open and fund an account from where you take some trades. For this next topic, we are going to talk about methods or systems of trading. In forex trading, we have basically two methods, three methods or three approaches to trading. The number one of them is price action. The second one is through fundamental analysis. The third one is technical analysis. These three approaches help to guide our decision making and thereby place you in a group, either as a price action trader, a technical analyst, or a fundamental analyst. Now, the first one is price action. What is price action? Price action refers to the characteristics of the price movement. It is a trading technique that allows the trader to read the market and get informed and subjective trading decisions based on the recent and actual price movement. It is analyzed with respect to price changes in the recent past. Depending on the choice of the trader, the use of price action to maximize profit entails making use of good money management skills, patience, as well as other tools of choice, such as the charts, the trend lines, high and low swings, and others. Now, for instance, this is a very good example of a chart. And you can see, like I told you, for me, I like to use the color red for my bullish candles, my bearish candles, while the color green for my bullish candles. Therefore, the downtrend is dominated with a red candles, while the uptrend is dominated with green candles. That is for my own understanding. When you start your own, you can decide to use any color of your choice to represent any of the candle formations. Now on this candle, let me zoom it a little. You will see at the far left, you will see a cycle there, which is written shoulder. Then at the center, you will see another cycle represented with a head. They name it the head, while the other one by the far right is named a shoulder again. Now, the price action trader is somebody who uses the movement of the candlesticks, read the meaning it sends out. Every candlestick at every given time sends out a different message. And the price action trader uses the message that is sent out by the action of the candlestick at any given time to make informed decisions. Now, in the business of forex trading, you will see, like as represented here, There are other situations that give different meanings also. But the one that we have that is represented here by a head and is known as head and shoulder. You can have the head and shoulder. You know, the head of the human being is higher in position than the two shoulders. So that is exactly the representation that is here. So you have head and shoulder, then you have an inverted head and shoulder. This one that is here is the inverted head and shoulder. And wherever the head and shoulder forms, it is giving the message that the trend, that is the direction of the market, is reversing or has reversed. Like, as you can see here, from this left-hand side, you see a downward trend. Then it formed a shoulder. It went back to form the head, formed the shoulder, which confirms the fact that the trend has reversed. And therefore, at this point, you can take a buy position, and surely you are going to make huge profit. You also have other ones that you are going to see, which is known as double bottom. As we continue, especially for those of you who will move to the 3 months intensive training program, you will come across a whole lot of other candle formations that confirms a particular direction of the market. Now, for those of the traders who use fundamental analysis as the basis for their decision making, fundamental analysis simply refers to the use of economic data in analyzing the forex market. It also refers to the process of examining the macroeconomic indicators, asset market, political considerations of one nation against another nation. Uh, these economic indicators may include natural disasters, different interest rates, unemployment rates, political issues, economic growth, government policies, and the rest of them. Let me give you a very good example. A few weeks ago, gold was on an uptrend. But when the Russian Ukraine war started, you know, Russia is a major gold producing country. So when the Russia-Ukraine war started, it impacted negatively on the trend of the movement of gold in the market, and the market dropped. So if you were in the market with a buy position and that event happened and you did not take cognizance of it, it will affect you, because at that point in time the market will drop and you may be taken out of profit. The same thing during the COVID-19 pandemic, every market slowed down, and therefore the forex market also was negatively impacted. Now, the third one, which is technical analysis, is the use of tools such as indicators and charts to analyze the market. And in the course of it, you analyze past and present movements of price action in order to predict future price movements. You make use of indicators, though most of the indicators that are available in the market, I make bold to say over 90% of the indicators that are available in the market don't give accurate information. They lag behind. Price action is, I think, so far the most effective means of market analysis. Technical analysis uses past and current behaviors to predict future behaviors. For instance, in the case of a weather forecast, you know, the experts in weather forecast make use of the past behaviors of the weather to determine the future behavior of the weather. The price technical analysis analyzes the art is the the art and science of identify crowd behavior in order to join the crowd and take advantage of its momentum. So if majority of the crowd is saying maybe you can use the with the aid of technical tools, you are able to determine that majority of the buyers, majority of the markets in the people, the persons in the buyers, I mean in the market are buyers, you also follow the trend. If you are able to determine that majority of the persons in the market are sellers, you follow the trend. So that is a technical analysis. But in all, I want to tell you that the best among all of them is price action, which we are going to base our studies particularly on it. Like I said, price action is all about the events that happen in the market. Like, for example, what we have here, this is a live market. We are on the live market. What we have here, as you can see from the top right corner, left top right corner is XAU. XAU means gold. XAU means gold. So here, what is quoted on the market here is gold versus the US dollar. Now, as you can see uh, this chart, every of this candle is passing different information around. Nearest to the left, you will see the uppermost point here, the uppermost position of the market here. You see at this place where the cross touches there. That place, you can see two candles. You can see two candles which are one of them is red while one of them is green. The information that passed out there is that there is going to be a downward trend, and from there it starts selling. The same thing, if you can see at this bottom where the arrow crosses each other there, that place now you can see that it sold until it got to that place, a point there. It got to a point there and it stopped selling. It stopped selling. Now, if you let's turn this thing, the chart, the other way around to landscape. Yes, as you can see here, if it sold until it got to this place and it stopped selling, and as you can see, a candle formed, a green candle formed, and after which another green candle formed. The formation of those two candles has confirmed the fact that the trend is about moving upward again. So you can see that is price action. And the reason why it formed like that is because there is a what we know as a support somewhere and on the chart, which we are going to talk about as we continue on. So that is this thing. So far, I want to make bold to tell you that the best method of trading, the best method of market analysis is the use of price action. However, it does not mean that if you perfectly study and understand the other methods of determining the market, that you cannot make use of them. You can make use of them. But for the purpose of this class, I'm recommending price action as the best mode of market analysis. At this point, we have to call it a day for today's class and expect you to properly go through the lessons. Wherever you have any issue you don't understand, you are free to reach out to us either on the platform or directly so that we can take a look at it and provide answers to your queries. Thank you.